Just sharing this out to a couple of people. Any trades out there? Man, it was an easy short today, easy short yesterday. So I'll take a look at you guys' trades today. You should have been short everything. You should have been short everything. All right. So if you were trading today. Now, look, there was some news that did come out right around 10 o'clock, and it confused the market. And when it confused the market, you know, a lot of people decided, not to trade. I went ahead and put my foot on the gas. All right. Soon as the news came out, the market popped, and then all of a sudden it fell off a cliff. Y'all see this? Fell off a cliff. So I'll show you guys how that trade panned out. All right, so I was actually in another trading room usually when I'm day trading, I don't really like to be live because I'm concentrating on my moves. Now I was in another trading room. I'm going to watch that trading room for a while before I anoint it as being a trading room you guys should be in. But I was in another trading room on TikTok, and I was just watching. I've been watching every day to see if this guy is really legit, because I don't really trust too many other people. So I was in that room today. I was also calling out the trades. But as you can see, guys, this is the 5-minute. We're looking at MNQ. So if you were trading the NASDAQ, so we're going to learn about futures. For you guys that don't know about futures right now, don't worry about it. We're going to learn about futures next month on the first week of the month. These are the minis. So watch this trade, minis. I love going in rooms and listening to that. I know it kind of sucks. You guys do the same thing, but I like going into rooms, and while another trader is calling out trades, I'm trying to see if they see the same thing I see. And we were seeing some of the same things. That particular trader didn't take a trade until later, after I had gotten out. So I'm trusting that particular trader. Their charts are not going to look as good as mine, but that's fine. All right. But what I want you guys to start doing is the first 5 minutes of the day, I don't want you guys to trade. The first 5 minutes, you should be chilling. Let 5 minutes happen first. Stop trying to jumpstart it. If you miss it, guys, there's a trade every other day. You gon' be straight. You got to have a little bit of patience. So this morning, using my setup, everyone knows I use the BTG setup, which is bias, trigger, and goal. I use bias, trigger, and goal, right? So the bias is going to be my 20-day moving average. My 20-day moving average was angled down. All we got were red candles. So I'm going to show you guys the 930 candle. It's that big candle that you see right here. This is the 930 candle. Wait. I know that, right around the 25,500 level, if I was calculating my ATR, I knew that we had room to the downside, because the NASDAQ moves about 475 points on average. We had 500 points that we can make to the downside. So the trade was down all day, it was down. So I was chilling. I was sitting back chilling, just waiting to see what might happen. Oh, let me put my tapper on. You guys can still help me tap this out. I know this is midday and a lot of you guys come at the end of the night, but you can still help me tap this out. Let me put my tapper on. So 5-minute candle, it's where you see that the 5-minute candle is where you see the green circle. Let I usually let 15 minutes go by. 5 minute candle, we shot down. Then we started to go up, but we couldn't break above the first 5 minute candle. In fact, we started rounding out 9:30, 9:40, 9:40, 9:45, and then we started to go down like a roller coaster. It went up like this. It couldn't continue to go up, and it started rolling over. We already knew what direction to go because everything is red. I'm using trending indicators. 98% of the traders that you guys see trade live, they're not going to use trending indicators. I wouldn't even say 98, 99% of the traders that you're going to see trade do not use trending indicators, which I don't understand why. How is that possible? I'm one of the 1% that's going to use something that color codes my chart so that everybody sees the same thing. I was biased to the downside just off color. Red is down, 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 green is up, green is up, red is down. There is not a single green candle on this chart. There's not a single green. Anybody thinking about going long? Stop doing it. Stop counter trending when you're day trading. The best traders that I've seen, the best traders that come out and they have like live feeds where 500 and 1,000 people are watching them. They are not counter trending, people. They are going with the trend. Like 90-something% of the time. If you've learned how to counter trend or go against the market, that's why you're probably losing. There are times to go against the market. Not when everything, guys, when you pull up a chart, I'm sorry, when you look at the market and it looks like this, which I guess on this particular chart, you do have a bunch of craziness that's green, but the biggest things that are out there are red. Now, earlier this morning, it was a lot redder than this. But when you look up and everything is red, like 3/4 of the stocks that were out there were red, we kind of had an idea that the market was probably going to continue to go on the downside, especially when you see a bunch of tech stocks that are down. Teslas, Nvidia, Broadcom, Micron. That's the first thing I see. Nvidia, Broadcom, Micron, AMD. AMD's down 13%. Nvidia's down 3%. Google's down. Remember, guys, the top 3 or 4 tech companies control 20% of the NASDAQ. So I immediately pulled up the NASDAQ. I was like, the NASDAQ is what I'm going to try to short today. Now, Lilly was up. Eli Lilly, Berkshire Hathaway, banks are up. And your companies like your Coca-Colas, your Pepsis, they're all up too. Your McDonald's, they're all up. So that tells me that the market's kind of heavy on the tech side. So the NASDAQ was what everyone should have been looking at this morning. So then when you pull up the NASDAQ chart and you see everything red, if you're not using a trending indicator, guys, you're not going to see it. Guys, there is no green candle. Let's see if we see any green candles. Let me see if you see any green. Guys, there was 0 green candles. Zero. Now, you could have pulled up the Heiken Nishi candles, or you could have looked at the TTM trend. Both of them, there was 0 green candles. Anybody that was long, you might not be able to trade with me, because you're going off of how you feel. Ooh, it's down a lot. I think I'm going to go up. Now, here's the thing. I get it. ATR. I get average true range. I get it. Average true range. I get it, guys. But we still hadn't hit the ATR yet until about, because 25.5 is where we started to hit let's do the calculations right now. Let's just do the calculations. Yesterday's high was around 25,500. Let's just do the calculations in front of everybody, right? That was the high of yesterday. The high of yesterday was right around 25,510. I'm going to write it right here. We're just going to do math. 25,510. We know that that was the high. Now let's do the calculations. Let's do the cheat sheet. Let's cheat. See, we know how to cheat. Other day traders don't know how to cheat yet. So let's cheat. 25,510 was yesterday's high. The NASDAQ moves 477 points. So we're just gonna use 500. So it's easy math. 25,510 minus 500 is gonna put us at 25,000. Let's just put 25,000 as the full move. Now, let's put 25,500 on our charts. Where's 25,000? Hold on. All right, 25,000 is right here. All right, we're gonna write it on the chart, right? So we already gonna do our cheat sheet before we even trade. So we know that if we break to this value, guys, and we sit there for about 15 minutes and the market doesn't reverse, there's a freaking problem. All right. Now let's go to today. Guys, early this morning, we hadn't reached the full ATR yet. That means there was room to the downside. Ooh-wee! We got room to run to the lows. The NASDAQ runs 500 points on average, and we ain't run 500 points yet. Early this morning at 9:40. That means I had 200 points I could make to the downside. When I was on live with that other trader that I'm starting to grow confidence in, I told the room, I'm going for 200 points. Quarterback put me in, coach put me in, I'm going for the bomb. I think I can catch this long ball. 9:45 happened. So 9:45 happened. I missed that move. I missed it, guys. I missed it. I missed the 9:45 move because I was messing around putting out posts for you guys. But guess what? The market gave me another chance to get in. The market gave me another chance to get in. Now, this is 9:30 to 9:45. All right. Now, I'm going to show you guys where I entered on this futures. You could have done this in the options market too. I'm going to show you guys how much money you could have made in the options market using the millionaire challenge trade. So my entry, it should have been this second circle right here. This should have been my entry right here on this short. And y'all see how easy it would have been. Everybody sees that we hit the 20. Like like you don't even have to be a trader to see that. Like you see it's red, you see it's going down. I'm gonna show you my entry where I should have gotten in. This is where I should have gotten in. This is where I should have gotten in. But here's the thing. Even if I had gotten in at 9:55, guys, we dropped about 300 points. So I just missed it. That was 300 points there. We dropped to 25,099. We didn't get to the 25,000, which is that lower white line. Remember, the lower white line is where we think it can go. So then you could have entered that trade around 10:30, and that's when I was in the room telling everybody what I was about to do. So then my entry became this area here. Now people are asking, what are the blue bars? The blue bars is what you guys should write on your screen every morning. So look for the first 5 minutes of the market. Put a line at the highest point of that 5 minute and the lowest point of the first 5 minutes of the day. If you can break above it, you have a chance that it might continue to go to the upside. If you break below it, and you see how we spent a whole bunch of time at the lower 5 minute area. This is for a reason, because the market didn't know what it wanted to do yet, but I did. That was the market consolidating or forming what we call a bear flag. My favorite pattern. Lord, how did this person come in here?
Grills on my wrist shit cost like 10 G's. I feel like Bug got all these carrots on my teeth.
This is for super fans. How the heck did that person get in here? They paid $10 just to come in here and spam? Just to get blocked? It's a waste of $10. They paid $10 just to come in here and spam. I'll take it all day. Any other spammers want to come in and pay $10 for 2 minutes so I can block you? Come on, spammers. You get 5 minutes. You got 5 minutes to put out there, you know, what community you want my community to go to. I will take your $10 all day, every day. These cats is hilarious. All right. So then I got in looking for 200 points. And sure enough, we dropped from 25,200 all the way down to 25,000. But check this out, because the market is just selling, a lot of you guys would have tried to do a counter trend right here. And if you did, I wouldn't have been mad. If we got down to the bottom and you decided to counter trend because it was at a Bollinger Band and we got the full ATR, I'm not going to be angry with you. I do that sometimes also. But today wasn't the day to do that because the market has already been heavy all week long. It's just been heavy. You can feel it. You can feel that the market wants to sell off a little bit. You can just feel it. You can just feel it. So it sat there for about 30 minutes. Now, y'all know me. I'm not going to trade after 12 o'clock. I'm not going to trade after 12 o'clock. You guys can trade after 12 o'clock. Joel ain't doing it. But y'all can continue to make money from 12 to 2. If I do trade the market, though, I will come in at 2 o'clock. I will come in at 2 o'clock and trade from 2 to 4. I refuse to trade from 12 to 2. I refuse to. Sometimes you will see the market turn around from that average true range, and it might start going up during lunchtime. And then you'll see a nice little run from 2 to 4 back to where we came from. But I'm usually on the golf course during that time. I come back home and then it's time to, do my 6 o'clock lives. All right. So I only trade for about an hour a day. I trade up to about 11 or 12 o'clock and then I'm done. Now, could you have done this same thing on the NASDAQ? Yes. So if you don't know how much money you make on mini futures, very simple. Every dollar move is $2 on the micros. Every dollar, I'm gonna write it here. When you're trading and it costs $4,200, so it's gonna cost you $4,200. Is I think it's $4,200. It's $4,200 a contract. Every dollar move, you're gonna make $2. So if I want a 200 point move, I want to make $400 per contract, and you can buy as many contracts as you can. A $400 move, guys, using $4,200 is a 10% move. Sometimes when I want to keep my when I want to make sure that I'm not risking it all, I'll trade the futures market. Because I can be wrong 5% and it's not going to kill my account. I can be totally wrong. It can go against me 100 points and I can get out. 100 points is usually my stop. My risk is going to be 100 points per contract. But my target goal is always going to be double that or more. So it's got to either be 2-to-1 or 5-to-1. Anything higher than 2-to-1, you're Gucci. I was looking for about 200 points. I got my 200 points. I'm good. That's $400 per contract. But if you notice, it dropped 400 points. You can lose 4 times in a row and take this trade and win it 1 time and still break even. That's what day traders do. It's not about how much you make, guys. It's how much you risk. How much am I risking and what is my reward? You always want your reward. You always want your reward to be twice your risk. Minimum. Your reward should be twice your risk. If I risk $100, I want to make 200 or more. If you're risking $100 to make 50, you're doing it backwards. You're not playing house. In this game, you want to be the house. That means you want to get paid a lot and you want to risk a little. So it sucks because a lot of you guys are going to have a bunch of losses before you start winning. True day traders are going to have a 2-to-1 or higher risk to reward ratio. All right. Very, very important. Now, in the options market, I'm risking 50%. I'm risking it all. That means I got to make 100% or more to be satisfied. I want to make 100% return in the options market or more, or I am not satisfied. I'm not satisfied with 25%. You guys are. I'm not. A lot of you guys are risking the whole option to make 25%. You're doing it backwards. Stop doing that. Risk less. You're gonna have to get to a point, guys, where it's not about you if you lose. If you really are about your strategy, you got to get out when it hits those risk levels. Maybe trade by yourself and don't let anybody know if you're right or wrong. If it's about being right or wrong, trade by yourself and don't let anybody see your numbers until you get it right. If you're trading amongst a group of people, of course you're going to want to be right all the time. Don't do it. Don't do it in front of people. Guys, I don't trade in front of you guys. Because if you saw how many times I actually lose versus I win, you won't believe it. You want to risk less and make more when you win. That's why you can see these ridiculous returns, but my risks are always small. Like even in my portfolio right now for my swing trade, my biggest loser is down 16% on an investment. If it gets anywhere near 20, I got to sell. That's my risk level for my investments. Anytime I'm down more than 20%, I have to get out. I have to reassess. I got to lick my wounds and then I got to buy in again. But that's an investing. And when I'm investing, guys, I'm using way more money. I'm using $10,000 or more when I'm investing. I can't afford to sit in something that's down 50 or 60 or 70%. When I'm trading options, it's a small amount compared to what I'm actually trading or investing in. So I can risk 50%. When I'm trading the futures market, guys, I'm only risking $100 per contract. If I trade 4 contracts, I'm risking $400. But I better be making double that or more. A lot of people say, Joel, why do you say or more? Because I don't want you guys to have a set amount for your reward. Your reward should be limitless. Your reward should be, I don't know what it is, but it's more than my risk. Because if you have a set amount that you want to make, you're going to limit yourself to the amount of money that you can make. I want you guys to think it can go to any price for profits, but my risk is going to be set at a certain value. But my reward is going to be at least double what my risk is. If you set that up now, that's 90% of trading. A lot of you guys think that it's your strategy, or you think that it's your education, and you think it's your charts. It's not. They did a study where monkeys took a dart and they threw it at the board, and whatever dart that dart hit, the monkeys were throwing at, that's the stock that people were buying. And don't y'all know that the monkeys outperformed the gurus on Wall Street? It's never been about what you're picking. It's never been about your strategy most of the time. But if part of your strategy is taking 20% and risking 100, then that's the part of your strategy that you need to change. But guys, this stuff is easy. Like, I can literally say at 9:30, I'm just going to go long. And if I keep my risk to a certain level and my reward to a certain level, you guys can trade that way as long as you're consistent. You got to be consistent. You got to be consistent. And your numbers have to be consistent. Don't trade risking 1 contract today, and then tomorrow you're going to trade 4 contracts, and then the next day you trading 8 contracts. Now that's not consistent, because you can be winning 4 days of the week, but then when you up how much money you're using on the day that you're probably going to lose, you actually had a winning strategy. You just didn't have your numbers consistent. So keep it consistent. That's why y'all know my numbers. My numbers have not changed for over a decade. When I'm investing in something, 10,000 is going to be the minimum. When I'm trading futures, I'm risking $100. All right. I'm risking about 1 to 3% when I'm using pure stock. All right. Hold on. Let me change this playlist. Not too excited about it. All right, this is better. All right, cool. So yeah, keep the risk to reward in place, but let's talk about the options market. Let's see how much money you could have made in the options market, which is what we're learning this week. Oh my God. Check out this. So we're looking at the MNQ. So if you want to trade options, I'm not trading options on the futures market, on the futures, which you can do. You can either use the XLK if you're looking at the NASDAQ, or you can use the Qs. I prefer the Qs. All right. Now the XLK, the Qs is what, 600 now? Shoot, I might need to do the XLK. All right, let's look at the XLK. All right, I want to keep the numbers down for you guys. So let's say you wanted to trade options this morning on the same exact setup that we just saw. You come in, you say, all right, Joel, I'm looking at your chart and I can see how everybody and their mama knew to go short and my butt is going long. So I'm listening now. We finally got some green candles, guys, right now. Y'all see that? We finally got green candles to the upside. But let's go back to 9:30. Let's say you decided that you wanted to take a short. You knew that the NASDAQ could fall and we haven't gone its full ATR yet. For you guys that don't know what ATR is just the gas that you have in your stock. Most of you guys didn't know that you actually, it's just like if I was to go buy a car, the sticker on the car is going to tell me how much I get per gallon. If I fill up the tank, how much I'm going to get per gallon. And on average, it's going to tell me how much I can get on a full tank. So a lot of you guys didn't know that. So if I was to check how many points I can get on a full tank of the XLK, it's going to show me over here. Let me type it. Why is it not popping up? Oh, let me do it this way so it can be the last one. It's going to tell me that the XLK moves about 3.14 points. That's, 3 points. That means if the XLK yesterday at the highs, is that right? That's not right. Tuesday. Oh, I'm looking at the wrong day. I was about to say. All right. So we see that the high of yesterday was right around 142. We know that the XLK can move $3. That means it's going to start losing. It's going to start running out of gas around 139. Okay. So if I know that 142 was the highs, and I think that it can go down in value, we got a cheat sheet. The cheat sheet tells us it's going to 139. Cheat sheet. Well, it's not telling us we're going there, but if it starts to drop, we know that it's going to start running out of gas around 139. Unless people start panicking. So on average, it's going to go to 139. Now, for you ballers that are out there that are using just strict stock, if you had $14,200 and you shorted the XLK, you could have made about $300 using pure stock, using $15,000. But a lot of you guys don't want to go that route. You're like, Joel, I don't want to trade pure stock and short this, to the 139 area. So I want to maybe go into the futures market where I can trade the NASDAQ and I can make, for every point I can make $2. And then I can try to make $400 there with about $4,000. So you can use $15,000 here, which is the most conservative way to do it. And you can just try to make $100 or $200 a day. Or you can go into the futures market, trade the same exact thing, and make about $400 per contract using about $4,000. Or you can do the Indy 500 of trading, which is what I also teach, the Millionaire Challenge trade. And you could say, Joel, I'm going for a home run over center field out the park. And I'm like, let's do this then. Let's trade the options. But before I decide to trade, I love to cheat, guys. I love having a cheat sheet. We know that it can go to 139. But what's the other way of cheating? The other way of cheating is to see what the whales are buying. So if I go to the put side and I look and I see where the whales are buying, guys, I want you guys to tell me. I'm teaching you guys something that nobody else is teaching you guys, which is interesting to me. So I'm going to pull up this picture. The best trader you've ever seen. I don't want to brag, but I'll be the best. All right. I don't want to brag. The best trader you ever had. All right. All right, now watch this. Man, John Legend was talking crap on this song, boy. I guess it got him married. All right, what I want you guys to look at is I want you guys to follow my chin all the way down. When you follow my chin all the way down, I want you guys in the comment section, tell me what is the largest number you see? What is the largest number that you see? I'm teaching you guys something. I'm teaching you guys $1 million strategy for free. You're not going to see this anywhere else. 600. See, y'all are learning. That's what I'm talking about. That's what I'm talking about. Guys, you're cheating. You're watching what the whales are buying. And you know what strike the whales are buying? They're buying the 138 strike. We know where this can possibly go to. We already know to go down, but now we know when to get out. If there's room for it to run. Now remember, guys, there has to be room for it to run there. So I'm running into the options market and I'm like, shoot, I'm about to trade the 138 strike. But I want to get in and out the same day. That's the problem that a lot of you guys are going to make. You're not going to get out the same day. You're going to try to hold this option till Friday. This is a get in and out. You robbing the market. You coming in, you robbing the market, taking your money and then getting the heck on. You going in there, robbing the market and then getting the heck on. This is Thinkorswim, Sun God. Offered by Charles Schwab. Now watch this. We already know that guys, we did 2 cheats. We cheated twice. Before the market opened, we said, man, if this thing drops, it's going to 139. But the whales out there are like, yo, we got something you don't even have. We on the floor right now with these whales and everybody buying the 138 strike. So I'm like, word? You mean to tell me I can get another point out of this mug? Great. Let's run it. Let's run it. Let's run it. Let's get it. All right. So then we already know what option to pick. Now, this is going to confuse a bunch of you because you're going to, whoa, what just happened? Hold up. My charts didn't work out right. I don't know what happened. Hold on. I don't know what the heck just happened. Hold up. All right. Maybe that didn't work. Hold on. Oh, I must have done the wrong thing. Oh, I picked the wrong thing. I was like, what the heck did I do wrong? Like this don't look right. All right. Now, honestly, guys, I wouldn't have taken that trade. Everybody knows that I'm 1,000 contract or more type guy. But I'm just showing you guys, all right? If it's not 1,000 or more, we saw 600, I'm not going to buy it. But I kind of know where we can go. I want to make sure there's 1,000 contracts or more. You still could have got paid. But I want to see 1,000 or more because I want to make sure that there's enough liquidity in there for me to be able to get out. All right. Just for you guys that are out there learning this, right? But at 9:45, you could have bought this option for about, oh, I got in a little late, but at 9:45, about 10:30, that option was about $100. Remember, I'm trying to hit a home run. I need to get 100% or higher. That option in about 30 minutes went from $100 to $268. That's what I am talking about. You talking about a $10,000 investment going to $27,000. That, in its essence, is the $1 million trade. You do that about 7 times, you're gonna be at about $100,000 if you're working with $1,000 or more. Now, are we gonna see trades like this every day? Hell yeah, we see trades like this every day. You thought I was gonna say no. We see trades like this every day. Because every single day I show y'all the millionaire challenge trade of the day. And it's never on something that you've never heard before. It's always an index or one of the top 20 companies in market cap. And that's the reason why I show it to you. I show it to you to let you know you should never ever. Oh, you guys can't see it. Sorry about that. I see it in the comment section. That's my bad. Let me show you guys what I just saw. I'm over here all hype and y'all can't even see. My bad. My bad. That's what I needed to show y'all. Sorry about that. Y'all know I be getting hype. 9:45. I mean, around 10 o'clock. You can't really see the charts, kind of faint. But this option just kept going up in price. It never pulled back. It went from $100 to $268. That's my bad. Yeah, if the volume's less than 1,000, I don't usually do it. I'll trade, but here's the thing. I could have gone into the Qs. Let's look at the Qs. Let's see if the Qs had enough volume. So you could have done the same thing, guys. You could have just done the opposite, gone to something that had a little bit more volume. What's Friday's date? Friday's date is 1st, 2nd. I can't see 1, 2, 3, 4, 5, 6, 7. So the 7th is Friday or the 6th. You could have done the same thing in the. All right, so I'm going to show you guys how volume should look. So I'm going to take another picture. I want you guys to tell me the most volume that you see on this chart that I'm about to show you. I got to keep looking back at the comment section so I won't be, so you guys won't be blind from what I'm seeing. I'm getting better at this. I mean, you know, I'm a trader, guys. I'm trying to learn how to be a live host. Bear with me. I'm trying. I'm learning every day. They're like, Joel, the first thing you need to do as a live host is you got to be able to communicate with multiple people at the same time. I'm like, man, I'd be too hyped to do that. Joel, you have to recognize when people throw you gifts. I'm like, this the gift right here, 100% trade. There ain't nothing else I need to see. Unless that gift is paying out 100%. Shoot. All right, what's the largest number that you guys see? All right, look at my chin. We're gonna go straight down. I'm teaching you guys how to look at volume. What is the biggest number you see? Write it in the comment section. Is that the biggest? 30,100. Good job, boss. Wait. Boss baby D. Wasn't the exact number, but 30,000. That is the strike I'm going to pick. Now, you could have picked the one that was 22 also, but it's going to tell you what everybody is buying. So that strike, guys, was the 600 strike on the Qs. So now that strike has 30,000 contracts. I'm trying to buy that. That's more than enough. I can get in and out, guys, anytime I want to. When there's 30,000 contracts, I know for a fact I can get out. It's so many contracts being bought and sold. There's enough liquidity for me to get in and out. Even if it's way out of the money and I need to get in and out the same day. So when we look at the Qs, instead of, people ask, why did you look at the Qs instead of the XLK? Well, the Qs are going to be, it's going to have more liquidity, but it costs more. You heard what I just said? It costs more on the Qs than it would be on the XLK. So some people will trade the XLK because the smaller the stock price, usually the smaller the options price. So people go back and forth depending on what they want to budget. But in my opinion, just get your weight up and just trade the Qs. All right. So if we were to go into the Qs and we did the same thing, it's going to cost you a little bit more, really a lot big more, but we'll see. Let's see how much it would have been. Let me go back to my charts. So if we were to trade the 600 strike, hold on. All right. Now, if we were to trade the Qs and we were now, guys, I know you're saying, why is your chart going up in value? Because you're looking at profit. You're not looking at the option or the stock. The stock is going down, but I'm buying a put. So that means my profits are going up. That's why the chart is going up in price. You could have bought this option. This is going to blow your mind when you see this crap. You could have gotten in right around 10:30, which is what time I would have bought. You could have bought this option for about $250, which is more than it was if you were buying the XLK. And that $250, guys, you're about to see a real number in 2 hours. That $250 was worth $750. That's right. You doubled your money. You tripled your money. You would have made a... You would have made close to a 200%. Well, you would have made a 200% return. 200. I'm only looking for 100. Oh, wait, hold up. Oh, okay, y'all can see it. I thought maybe it was covered again. See what I just did? 250 to 750 in 2 hours. I knocked that bad boy out the park. Now, I know you guys are saying, well, Joe, why didn't you just trade options today? Because the market looked a little heavy and I didn't want to risk a lot of money. I was buying like 1 or 2 contracts in the minis. I was like, I just want to risk maybe $100 or $200 a day. I didn't really want to risk, the whole, the 250. I would have risked half of that, which was also 100. But the futures market, you can get in and out. In my opinion, it's just a lot easier. I can even use active traders. So futures traders are traders that are using the market like a job. I know a lot of you guys want to do the millionaire challenge trade of the day, but real futures that do this to create a salary for themselves, they're trading the futures market because you can get in and out a gazillion times, and I don't need 25 grand. The options market, I can't trade unless I have a $25,000 account. I can't get in and out of these options multiple times. I can't just take a loss, get out, jump back in at 10:30 unless that account has $25,000 or more, or if I'm using a cash account. All right. We were looking at the Qs, need to know. So Qs, NASDAQ, XLK, we looked at all three. But they all pretty much did the same thing. The Qs is just going to have more liquidity. So yeah, this chart though is the Qs, QQQ. But the futures that we were looking at earlier was the MNQs. We were looking at the micro NASDAQ because I was risking $100. If I was trading the big NASDAQ, which I haven't done in a minute, I'd rather trade 10 contracts of the minis than trade 1 contract of the big NASDAQ because you need like $40,000 $1,000. Like, it's ridiculous now. I don't know anybody that can actually trade the big NASDAQ. We all micro now. Even though we heavy hitters, we still trading the micros. You got more control over the game when you're using the micros. Cool. Yep. So what time is it? 1:51. Any trades y'all want me to look at before I get out of here in 9 minutes? I just wanted to show you guys the what you should have been trading this morning. Now the market got heavy, and the reason why the market really didn't move yet is because the Secretary of State spoke earlier. Bessent, I think his name is Bessent, whatever. And he was speaking in front of the court. And when he came out and spoke in front of the court, he was speaking for, the Trump administration. And he was stating that the tariffs was not causing any type of inflation. So the market processed it. It moved a little bit. And then once we had all the information we needed, and you guys need to listen out for information. If you can look up, if you're trading something, make sure that you check to see if there's any earnings that's coming out. If you're trading the futures, you need to always know what the top 10 companies in the world are doing, because Nvidia can move the market. Amazon, Google, they can move the market. All right. Apple can move the market. If they're down heavy, chances are the market's going to be down. So you got to know what they're doing. All right. So, the Eli Lilly was up big today. So that helped, the biotech sector. So you got to have your TV on, or you got to have you got to know when these different companies come out with their earnings, because it can really move the market. So because that news was coming out before 11 o'clock, sometimes the market takes a pause. Once that information comes out, then the market decides, all right, we can continue going in the direction that we were going, because the market was selling off. The news came out, the market popped a little bit, and then once everybody had the news, and I told everyone in that other trading room, I was like, guys, we about to fall off a cliff, because the market just seemed heavy. It just seemed heavy, and it seems like it wants to go down probably until April, guys. That's my call. My call is this. Last April, the market panicked because of tariffs. It's February now. The market does not forget. Anytime we have real big moves in the market, like, people remember that. If you lost a whole bunch of money in April, you remember April. So a lot of the times we get in front of what's going to happen in April. And sometimes it happens earlier, maybe like in March. But because April was the lows of last year, you got to put it on your calendar as a date to watch. And anything that's close to it might mimic what happened last year. In my opinion, that's probably what the market's going to do. It's going to be heavy until we get out of the first 3 months of earnings. And then we're going to have to hear the earnings for the next 3 months, which is January, February, March, April, May, and June, before the market decides what direction it actually wants to go in. Now, what you should be watching is watch and see how the market reacts to these earnings. Because if we don't fall 15 or 20%, guys, and we don't get knocked down, the whales are going to come back in the market and push this thing as high as it can possibly go. So we're testing lows to see. It's kind of like if you had holes in your roof and then all of a sudden you patch those holes up. Not even in your roof, in your floor. Let's say you had some holes in your floor. You're not going to feel too comfortable walking on that floor. You're going to walk a little bit slow. You're going to test it with your toes. You're going to jump up a little bit before you feel comfortable walking around. That's what the market is probably going to do. It's going to sell a little bit, and we're going to see if the floor is going to be sturdy enough to give us a floor for the year before you get these whales to come back in the market. And it's early in the year. These whales don't have to push the market up until May or June if they don't want to, because they have all the way to the end of the year to be either profitable or break even. So you don't necessarily have to buy in January or February. With April being that month that we sold off last year, a lot of people are like, man, I'm just waiting till after April to see what's happening in this market. If you're in Bitcoin, I keep telling you guys, Bitcoin's going to 65. You can cry all you want to. I've been calling this whole move to the downside, and I own a full Bitcoin. It's going to 65 or lower. Just quit being in denial. Quit trying to come to me with all this information about halving and all types of other catalysts that can push Bitcoin up. It's going to 65. Get ready for it. Be prepared. If you haven't bought it yet, you might get a chance. All other stocks. Watch the volatility index. Let me pull up the VIX. The VIX today is sitting right around, what's the VIX sitting at, guys? The VIX, which is what you also should, look, I should know what the VIX is. I don't even know what the VIX is today. The VIX is creeping around that area where everybody, I should have known it was sitting at 20. That's what the market does. 20, guys, is when pension funds, mutual funds, and advanced investors and traders and whales like myself, we don't even think about buying the market until the VIX is at 20. So that's why it pushes the 20. It's like, hey guys, you said you were gonna buy when we got to 20, where we're here. You're gonna buy something? Me, I'm like, it's still early. If it was like May or June and we was at like 20, I might be like, yeah, let me give you some. But it's early. Like, why do I have to buy now? The market can still go lower. Bitcoin still ain't hit 65 yet. We're probably about to see a 30 VIX. When you see the 30 VIX, guys, don't panic. It's expected. Last April, we hit 50. Last April, we hit 50. We remember. We're gonna test and see if the market can hold. It hit 20 today. 20 is when you're supposed to be picking at the market. Anything that you've been wanting to buy recently, this is your chance to get a placeholder in your portfolio. So me personally, I'm looking for companies I've been interested in. Instead of putting 10,000 down, I might throw 2,500 at it and wait to see what happens. A week goes by, we hit 25 or 30, I might throw another $5,000 in. Then I chill, see if the market is panicking, because we want to see how much the market's gonna panic. 30 is usually the panic button on average selling. 20 to 30 is just regular garden variety selling in the market. To get to 50, you need something catastrophic to happen. You need a rocket to go off in another country. You need America to send a missile to Iran. You need China to invade Taiwan. You need something heavy to get it to 50. Last year, the 50 came because Trump put a tariff on the market. That spooked everybody. That was the catalyst the market needed to get to 50. We only see 50 every 18 months. If you guys don't know what I'm talking about, the VIX is like the Richter scale for selling. It's the Richter scale for the stock market. If you're not using it, I don't know how you guys are buying. Just like if an earthquake went off, I don't know how heavy that earthquake was. Now, I know a lot of you guys use the MACD and you use stochastics to see how heavy the selling is. I'm a graph person too. I like looking at graphs, but I prefer the VIX. The VIX has been the most accurate, in my opinion. You guys are looking at the VIX now. You see those big old spikes? That's when it rose over 50. That's rare. Last year in April, when it rose above 50, that was rare, guys. That's how you should have known to buy. It only happens every 18 months. Once you start learning that, you're like, oh, hold up, Joel. Hold up. We had a pandemic. Yep, we hit 80 on the VIX. We had a tariff on the whole world. Yep, that made the VIX go to 50. Russia sent a missile over to Ukraine. That made a 50 on the VIX. We had a pandemic. That sent it to 80. Before that, what do we have to get to 50? We had Brexit. We had an impeachment of the president. That was about it. So you got to watch those numbers. So 30 is usually that blow off top, though. That's when the market sells off, unless there's something attached to it, like a missile. Like the market can be scared, and then all of a sudden you see a missile go across the sky. Then everybody goes, oh my God, sell everything. It's just regular selling until then. And then the minute somebody says, look in the sky, and we're like, oh my God, America just tariffed the whole world. Sell, 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 sell. You need something like that to get it to 50. You think a new Fed can make the VIX hit 50? Deanie? I don't know. You think that'll get it to 50? I mean, I'm learning. I'm still fairly young. So I've seen an impeachment get us to 50. Brexit got us to 50. A pandemic got us to 50. Tariffs got us to 50. Bombs get us to 50. Even when we started to raise interest rates and we went into a bear market in 2022, I need to look at the VIX and see if we hit 50 anytime during that year. I don't even know if we hit 50 that year. So maybe even raising interest rates. I got to check, though. I haven't checked yet. Well, I can check right here. What am I talking about? Let's see if in 2022, guys, when we entered a bear market, y'all know the highest the VIX hit was a 40. We didn't even hit 50 during 2022. So that's why I'm like, we can get a new Fed. But even when we started raising interest rates, we couldn't get a 50 VIX. We might get a 30 or a 35, though. I agree with you. The 30 is going to feel like a 50, but I don't know if we can get the 50. We need like an invasion or another pandemic to get to 50. But I'm glad that you guys are watching it, because this is what we're looking at to kind of figure out when the lows are in for the market, so we can go in there and buy. And then buy those 6-month, 12-month options. All right, I got to get out of here, guys. You say it depends if the administration owns them. True. All right, guys, I will see you guys at 6 o'clock tonight. I just had to show you guys that trade. I do pop-ups at 1 o'clock. Probably going to be Mondays and Wednesdays. So Mondays and Wednesdays, I'm going to do these same pop-ups. I'm going to try to keep it consistent. You guys can count on me to do my lives at 6 o'clock in the evening. Now, my lives at 6 o'clock in the evening, they're kind of similar to this, but I'm talking to everybody at night. I talk to my day traders, my investors, my swing traders, my crypto, my Forex people, everyone. And I try to show you guys how to use price action for the strategy that you're using. So I talk to everyone at 6 o'clock. These 1 o'clocks are usually pop-ups just for my day traders that are trying to make really fast money in this particular market. Those that don't have a 9 to 5 or at lunch listening in on what we're doing. That's what these pop-ups are for. So I'll see you guys at 6 o'clock tonight. And I'm out of here. If you don't know this, though, I am teaching options this week for free. So if you don't know what options are, I've been teaching it for free for the next 7 days. We are on day 3 today, learning how to calculate break even. How to know when that option is at, what value it has to be to break even so you don't lose all of your funds. We're going to learn how to calculate that tonight. Each day, I'm taking beginners who've never bought an option to advanced or intermediate traders by Sunday. And on Sunday, guys, I'm not going to go live at 6 because of the Super Bowl. I'm going live on Sunday. If I go live on Sunday, I might not go live on Sunday. This might be a 6-day class, but that'll be around 12 o'clock on Sunday. All right. All right, guys. Peace out. I will see you guys later.